The Dow and S&P posting their sixth consecutive day of gains, and the Nasdaq is now positive for April, even after all of this tariff volatility. Let's bring in Liz Ann Sonders. She is the chief investment strategist at Charles Schwab. Liz Ann, always great to get your insights. So,
thank you, John.
You post a lot of very interesting charts, and there's been this disconnect between how consumers feel and what the hard data shows. So what's your sense of what will happen first? Consumers feel better or the data look worse?
Yeah, that's a great question, because we have the recency bias of what happened at the very end of 2022 into 2023, when you saw actually a very similar collapse in the soft data as we're seeing now, but ultimately was not corroborated by the hard data. And at that time, we didn't anticipate that it would be corroborated by the hard data, felt that the underlying pillars for the economy were strong enough. I think this time maybe is a little bit different. I think we're more likely to either see some catch down by the hard data to the soft data, or some convergence maybe between the two. But in metrics like consumer confidence, which just came out, it was both the present situation and the future expectations piece of it. The fact that we are already seeing cracks having formed in the labor market. I think the backdrop is a little bit more tenuous now than the last time we had that big divergence between the soft data and the hard data.
So we got this immediate market reaction to the initial tariff headlines, and then a sigh of relief in a sense that maybe those initial headlines weren't going to stick, but there's still some kind of a real economic fundamental impact to whatever's coming, and that's lagging. So is part of what you're saying that we're, in a couple months, we're going to start to feel it?
Yeah, and by the way, it's not only lagging, but I think, to use a technical term, John, I think the data is going to continue to be quite funky in the near term. You had a lot of the pull forward, the tariff front running, whether it's in autos or other retail goods, what many builders have been doing, and that flattered some of the recent numbers. Now you potentially deal with the offset to that. That said, a lot of companies in that front running have built up inventory. So this concern about the point at which shelves are empty, that might get pushed a bit out because of that front running that boosted inventories. That could mean the shelves are kept a little bit more ample in terms of products. So there's going to be a continued push and pull in this data, an attempt to really try to fine-tooth comb it to get a sense of, once we get past the next month or two, what's the trajectory of the economy? The rub is that we're not getting much forward color from companies. You would normally get a lot of that sort of flavor of the future from companies, but we have an increasing number of companies akin to what happened in the early part of the pandemic. We saw another handful of very high-profile companies just withdraw guidance altogether. So analysts are not able to provide some of that light in an otherwise still very murky backdrop.
The flip side of this, Liz Ann, and I realize it speaks to the uncertainty of this current backdrop, but we just had Stephen Myron from the CEA on from the administration. He's the fourth person from the administration, including the president, that we've played sound from on CNBC today, who basically said trade deals are imminent. They're coming. If we do see some big, meaningful trade deals struck, how does that change the forecasting altogether?
Well, I suppose it would be what the nature of those deals are. True comprehensive trade deals between two countries based on history, on average, those take about 18 months to put together. And then it's actually close to 4 years on average historically for the implementation of those. So that's why there's more discussions that maybe we're going to get some sort of, memorandum of understanding, just the frameworks of a deal versus a true comprehensive deal. And then it's what the nature of those are and whether that sends a message that there's going to be follow-on with other countries with which we're negotiating. So I guess the short answer is I don't know what those deals are going to look like, but we'll at least start to get a little bit more color than we had a couple of weeks ago, for sure.